Hello and welcome to this week's strategy video with me, David Jones, and Trading 212. Now, there have been quite a few requests for what we're going to cover this week, and we're doing the subject of Fibonacci retracements. Now, I have to start off by saying I am not a big fan of Fibonacci retracements. I don't believe they work, but what do I know? So what we're going to do, we'll go through the theory and look at it in a real market, and you can make up your own mind. So Mr. Fibonacci was an 11th century mathematician, came up with the Fibonacci sequence, which we'll see in a second. And the argument that the Fibonacci fans would use is that you see these Fibonacci numbers occur everywhere in nature. For example, the shape of the galaxy is a Fibonacci logarithmic spiral. It's the same for the shape of a snail's shell. You can figure out the number of petals on a flower and how branches grow. It's all determined by Fibonacci. So the argument is, well, Fibonacci occurs everywhere in nature. There's no reason why we can't apply it to the markets. I'll let you make up your own mind, but first of all, let's take a look at the theory behind Fibonacci retracements. So Mr. Fibonacci, our 11th century mathematician, came up with the Fibonacci series of numbers. So here we go. 1, 1, then 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8, 8 plus 5, 13, 13 and 8, 21, 21 and 13, 34, and so it goes on. So we have our Fibonacci sequence of numbers where every number in the series is the previous two added together. So these numbers then have certain properties. For example, once we get past 1 at the beginning, any number divided by the next number along, the result gets closer and closer to 0.618. Any number divided by the number 2 along, let's say 8 divided by 21 in this example, the result gets closer to 0.382. Then any number, let's take 8 divided by the number 3 along, the result will get closer and closer to 0.236. So these are some of the values of the Fibonacci numbers. Then right at the beginning we have 1 divided by 2, the result is clearly 0.5. So we have these various calculations that come from Fibonacci numbers, and what chartists do is convert these to percentages. So 23.6 becomes, or 23.236 becomes 23.6%. Then we have 50%, 38.2%, and 61.8%. Okay, so those, for a charting point of view, these are important Fibonacci retracements. So let's see how this actually works. Let's look at the theory. So I'm going to clear the screen and we'll start with a theoretical market. So I've written the numbers down here as a reminder. So let's say a market is moving higher. It's doing this and then starts selling off. Fans of Fibonacci will use Fibonacci retracements to try and figure out how far back is this market going to fall before it resumes its trend. So they'll say they might take the move from here to here. So let's say that is, 100 points moved. So the market rallied 100 points. When the markets drop back 23.6% of that move, that's the first Fibonacci retracement level. So they'll look to see if the market holds there. If the market breaks, the next level they'll look at is 38.2%. If it breaks that level, they'll look to see if the market holds at the 50% level when it's dropped back 50% of that rise. And the final Fibonacci level for this example is 61.8%. So they'll wait to see what the market does at these levels. And the assumption is they're going to be like hidden levels of support in an uptrend or hidden levels of resistance in a downtrend. And the thinking is if the market drops back more than 61.8% of the prior move, it's going to go all the way back to where the move started. Okay, hopefully you're still awake after that explanation. Now what we'll do, we'll apply it to a real market, and we're going to take a look at Fibonacci retracements on the price of gold. So let's take a look at Fibonacci in the real world. What we're looking at is gold. So I'm going to do a couple of historical examples to show how it might have worked, and then a current example on gold. So Let's pretend it's the end of February, so we're here. We've watched gold go